Mr. Ashok Atluri, CMD at Zen Technologies, joins in. Mr. Atluri, clearly, optically the numbers do look good with the kind of growth that we've seen in terms of the profit number as well. A 30% jump comes in over there, and it's been aided by a higher other income. What is it that the street is not really probably taking positively? Because according to us, it's, I think, the expected orders that have not really materialized as per what was expected. How are you looking at it, and how are you looking at Q4 and then FY26?
So the orders, we actually anticipated that the orders will start in the end of Q3, and substantial orders will come in Q4, but they have got delayed, and I think that must have caused some concern. But at this point in time, we feel that the orders will start coming in Q4, but they may spill over to the Q1 and Q2 also, the order we're getting, but the execution will also start pretty early. So I think the lack of order is something the shareholders are a little concerned about. So I think otherwise the government is accelerating its purchases. We know a lot of product requirements that are coming up, and again, we have been saying that in terms of the average CAGR that we have aimed for the next 3 years, we are reasonably sure about achieving the CAGR rate and deliver what we have promised.
Okay, Mr. Atluri, talking about this ongoing quarter, can you give us an idea about what kind of awarding activity are we witnessing right now, and what could potentially be the order book for the company as we move into FY26?
So, no orders have been received till date, but in the next 45 days or so, we see that some orders will come through. I don't want to really give the numbers, but approximately about 800 crores of strong pipeline is there. That should, we expect that to materialize before, Q2, around by Q2 at least.
When you mention about 800 odd crores, does that factor in exports? That's number one. And two, the earlier indication, if I'm not mistaken, was close to around 1200 odd crores. So do you think that gap will be filled in the fourth quarter?
Yeah, so we were saying that the 1200 crore inflow would be there. So out of that, we are talking about 800 crores domestic, and the rest we are expecting from the export order or export by way of export orders.
So with all of this said and done, with that downtick or maybe slower execution that you're seeing, are you confident of meeting that 900 crore guidance? Because the first 9 months we've seen around 650 odd crores that have come in terms of top line. So around 72% is what you've achieved.
Yeah, so our fourth quarter is usually heavy, and basically we would we encourage shareholders not to look at quarter on quarter, but yearly target we are on track as of now. We should be able to achieve 900 crores. Yes.
All right. So in terms of execution for the ongoing order book, can you give us some sort of timelines about how things could potentially pan out?
So, the order, I think whatever is the order book, we should be completing. Again, there is about almost 300 crores worth of annual maintenance contract out of in that. So, if you remove that, the remaining 500 plus crores will be executed during the current plus next 2 quarters. That will be exhausted completely.
Okay, and your 50% CAGR that you plan to achieve in the next 3 to 4 years, will you be on track to achieve that as well?
Yeah, so again, if there is the year which is muted, which like for example, if 26 is muted, we'll definitely cover it up in 27 and 28.
Okay.
So with the kind of orders that you see right now, do you think that there could be a change in the products and the services that you will be offering in maybe not, if not to FY26, by FY27, FY28, in terms of the newer trends that are picking up your potential conversations that you're having with the government and other clients? If you could give us some sort of a picture here.
So we are completely focused on anti-drone systems and simulators at this point in time, and they're very huge market, especially anti-drone systems. and we expect we are also adding the new product, the new acquisitions like advanced ARI that we have done. That's going to give us almost the big fillip. And this is a completely area that we have ignored much, which is naval simulation. Now, ARI is a leader in marine simulation. Globally, it's number 2 or number 3. But when we get in, the one thing that it lacks in their portfolio is the weapon systems that are required to make it into a naval simulation. And that's exactly what Zen has. So this synergy which will be created by this combination will, I think, lead to additional market. This was not factored in when we projected the 50% CAGR. So this will definitely add to what we projected. And this is, and Indian Ocean, typically, even though we are typically focused on the two friendly neighbors on the top, we forget that if we just turn it around, there is a small diamond, India, and the whole of Indian Ocean is available to us, and that's where the future wars will be fought. That's where the future power is, and that's where we are going to focus with ARI coming in. And with these technologies, we can definitely establish a leadership position, and as a country, aid other a country being bullied by our friendly neighbor to ramp up their training requirements and come on top. So.
Okay. And with all of this said and done, your Q3 margins have been below 25 guidance level of 35%, right? So do you still maintain that number? And why has that variation happened this time around?
So, one thing is because the turnover is less, the fixed expenses remain constant, so the margin is affected. But when you look at the 9-month total margin, they still remain at 35 and 25, approximately that much. So again, and yearly, we still stick with the guidance that EBITDA will be at 35 and PAT will be at 25.
So any potential of more business coming from abroad, from private players, from the private sector space as well?
No, in the sense that we may be collaborating with some companies to bid for certain tenders. So that would be the thing. But our customer is usually the end user, which is the government themselves of various countries. So yes, there may be opportunity to collaborate and bid. But as we speak, we are entering into the U.S. market, and and we are setting up the manufacturing facility in U.S. And when with Mr. Trump pushing for the exports from America, I think we'll be one of the beneficiaries there too.
Balance sheet does seem to be a stable one at this point in time, which is why that do you foresee that you'll need to raise funds over the next 1 year and under those circumstances, or do you think internal accruals are enough for you to run your operations and even expand beyond what you have currently?
So we did a QIP, a few months back. I think that that has given us a very healthy position, and we need to, we said we're going to do some acquisitions with that. The acquisition process has started, but I really don't see any need to raise any more funds in the near future.
Okay. As you mentioned about acquisitions, Mr. Atluri, clearly, I think 2 of them that you've already announced with the earnings. With regards to both these acquisitions, what's the kind of incremental revenue that you're expected to garner?
So we have done 3 acquisitions. One is Bhairava Robotics. The second is Vector. Bhairava Robotics is in the field of robots, and they are into serious R&D at this point in time. Again, one of the reasons we try to invest in companies is when we feel that they can become a globally relevant player. So Bhairava, they're just starting. I think the revenues from them will start only in FY27. The second company is Vector. They are absolutely, if you go and ask anybody in the drone space ecosystem about Vector or the promoters, Karna and Prithvi, you'll definitely know that this is a very, very leading supplier of both BLDC motors and potentially IC engines for tailor-made for drones. So this is a very big acquisition, and we think a lot of exports are going to happen in that particular field, and they have applied for relevant patents also. The third, of course, is the ARI that I was talking about, with which we will make a big bang entry into the naval simulation worldwide.
Okay. And very lastly, overall, if you see in terms of Trump's policies, how are you viewing it for a company like yours? Do you think it'll open up new doors, or do you think there could be some bit of blips that could come in?
I think this is a great opportunity for India to buy relevant technologies, not outdated F-35s. which Elon Musk, his team member, has said it is the least value for money in the military history, and they have he has trashed that product. But if we India actually I mean, under the current leadership, they will, I think, they really buy technologies and products that can win a war. That will be fantastic, and we think we will definitely benefit from that, in the sense that one thing the under Musk's guidance is they will stop doing the cost plus model, and they'll say, listen, develop the product and we will pay the money, which is what he has done with rockets. You overtook both Lockheed and Boeing. They used to do cost plus model, and he offered that if my pay me only if my rocket flies. We specialize in Zen specializes in that. We do our self R&D, and we are willing to offer to American forces what will work for them, and they can pay us only if they like it. So we specialize. So I think that's a big opportunity for Zen in US too, and we look forward to the next couple of years in a very excited manner.
So Atluri, we leave it at that. Thank you so much for joining us and, well, telling us all about the business going forward. We wish you the best. Thank you, sir.
Thank you.